Houston Real Estate Radio with Shannon Register on the 950.
Thanks for tuning in to Houston Real Estate Radio. James and I are here in the RREA.com studio over in Spring, Texas. We were talking earlier with Dr. Jim Gaines from the Texas A&M Real Estate Research Center over in College Station. He was Skyping in and gave us some great insight into the fiscal cliff situation going on. He gives us a great view from not only the local level and the Texas level, but as a national level, how it's going to affect the real estate market, and a lot of that we just don't know how it's going to affect the market yet. We do have a lot of debates that are going to be coming up ahead of us, just trying to figure all of this out. Have you heard about this, James? The 3.8% tax increase that's going on.
Yeah, yes, I have.
This is an investment tax on homes, and there seems to be quite a rumor going around that it's a tax that's being imposed on home sales, and that's really not the case. What's going on with this?
Well, it's kind of complicated, and most things that come out of Washington tend to be, but it was tacked on to the Affordable Care Act as a way to pay for part of the Health Care for All initiative.
Mm-hmm. Obamacare. Right.
Affectionately known as Obamacare. And the idea is that, the thing that most people are thinking about is 3.8% of my, when I sell any kind of real estate, but that's really, really, really not the case. First of all, this 3.8% is going to affect very few people. It only affects people that have a gross income of $200,000 if you're single, or $250,000 if you're a couple filing jointly. So that's excludes quite a few of us, quite a few people out there, and even beyond that, it's only a tax on any capital gain that you get. So if you sell your primary residence, that doesn't count. But if you have investment real estate property and your adjusted gross is over a certain percentage, then you would be affected by this tax.
It's really interesting that this tax has nothing to do with the sales price. Absolutely
not. Absolutely not. It's about how much you make off of that sale.
And if you don't make over the $200,000 in income, you never have to worry about this.
Right, and that's the big point. It's not going to affect 95% of the people that are out there.
Yeah, it really sounds like this is a tax that very few homeowners are going to be faced with.
Mm-hmm. It's really not a tax, so much on real estate or on homeowners themselves as a tax on investors. And when they talk about capital gains, that's your total capital gains. That's your stocks, your bonds, your real estate holdings if you have them, and other things of that nature. But it's a tax on that, and it's only a tax on the part that would be taxable. So it's even a smaller percentage of that big chunk of money for some people. So it sounds more sinister, I guess is the word, than it really is. Of course, all taxes are
Don't go there.
Right.
According to the National Association of Realtors, if you have no capital gains income, no rental income, or no interest or dividends, you'll never pay this tax, even if you have millions of dollars of other types of income. Mm-hmm. I think that's very important because that's so overlooked. I mean, I just hear so many rumors going around that this is going to be a tax on real estate, and it's just not. It's a capital gains tax.
And that's the problem. Once the rumors start flying and the emails start flying, people, it's sad. Unfortunately, we live in a society where people want to believe the worst, and sometimes it's never as bad as it seems.
Yeah, you really need to talk to your accountant or your tax accountant. Really get information from them. You want to have good advice whenever you're doing your taxes. I mean, this is important stuff. And, whenever you sell a home, you want to get good tax advice about it. There is a formula for all of this that determines the amount of the tax due. If you file a single tax return, your $2,000 of income is always protected from this tax. So, for example, $200,000, sorry. So, if your total income is $205,000, the 3.8% tax would only be imposed on that that $5,000.
Correct. That's right. It's only on the gain, not on your regular income. Yeah.
So going to affect a few sellers, very few sellers. I know I've had a couple of sellers ask me about this, and it really does affect very few of them. As a realtor, of course, I refer them to their tax accountant, though, because that's really who can give them the best advice on this.
I had a client that came in, and we mentioned this on a previous show, and she has a farm in Kentucky, and she owns quite a bit of land on the Baytown area of Houston. And she's in that bracket. She's gonna, if she sells that farm, which she's looking to do, the kids don't like going up there, and she's kind of older and doesn't, it's the family farm that she grew up on, but the kids aren't interested in holding on to it. So she's looking at having to pay that tax.
If you are selling your second home, it won't affect you as long as your income is below the $250,000.
That's right.
So
that's right.
Because I know there are some people selling second homes like that are concerned about it.
And if what they say is true, you're in the top 1% if you're making more than $250,000. So you're really talking about a very, very small percentage of Americans that would be affected by this tax. Meanwhile, the city of Houston is proposing changes to Chapter 42 of the Code of Ordinances, which I thought was interesting. Chapter 42 is the Land Development Code. Houston, as you know, doesn't have any zoning laws, but development is governed by codes that address how property can be subdivided and other land use issues. So that's going to be an interesting thing to watch in the months coming up.
Yeah, it's interesting. Some of these proposed changes, you can go online and read about them. They're changes to the single-family performance standards, lot sizes and widths, building line performance standards, removing the urban area designation. It addresses shared driveways and parking, building line encroachments. So several issues, consumers listening to this show may or may not be interested. If you are, you can always go to HoustonRealEstateRadio.com, and we'll have links to the information on this, and you can read about it.
And this is something that's important because we're seeing more and more things like shared driveways, in town. And there are still lots in Houston that have yet to be developed, and tracts of land that have yet to be developed. So going forward, this is just making smarter choices about how we develop and how we use multiple use property.
Yeah, we're kind of running out of land in the inner city of Houston, so you have to be careful how it's used. You'd
be surprised where some things are and where people are starting to build residential that used to be industrial and used to be, even farmland in parts of, I would say Area 9, but north of 290, east of 45. There's still some property to be developed out there. Also in Houston, we've ended 2013 with a bang, according to the MLS. December single-family home sales increased 11.4%.
Yeah, we've seen some really great growth in the Houston area despite the downturn we've had over the last couple of years. We closed out the year with only 3.7 months of inventory, and that is the lowest level since December of 1999.
Yeah, that's amazing. And, it's also amazing. It's the homes over 500,000 that are really starting to pick up. The luxury market for the area has registered the highest volume of sales.
I still say this was the best winter to sell a house. I'm just convinced it's been the best winter to sell a house, and it's going to be the best spring. I think so.
Like I said, the interest rates are coming in the fall, so spring and summer are the time to get in there and do it.
The average home price is about $244,000 right now, and of course that's low for the national average. We still have very affordable housing in the Houston area, and foreclosures are down about 24%, so that's good over last December. And only about 14% of our housing inventory is foreclosures. So if you're an investor, you've kind of missed the boat on those great foreclosure deals. August was the top selling month of the year. That's pretty common. That's pretty consistent. That's right before the kids go back to school. A lot of people move during the summer, so that usually tends to be the top month. 19 consecutive months of an increasing real estate market here in Houston.
It's amazing, isn't it?
It's fabulous.
And I don't see any end in sight.
I love it.
Yeah. If you have a real estate question for Shannon or myself, call and we'll get it answered for you on the air. 281-882-8088. I'm James Brown.
And I'm Shannon Register. You're listening to Houston Real Estate Radio, and we will be right back to answer your calls from last week.